Everyone, in this video you will learn how to calculate materials consumed when the opening value of materials are provided, then the purchases and the closing value of materials are provided, and you will also learn how to calculate the depreciation when the opening value, the purchases and the closing value of an asset is provided. So let me show you the question here. In this question, we have to prepare the income and expenditure account of Ramakrishna Mission for the year ending 31st December 2013. They have also provided the receipts and payments account of the year ending 31st December 2013 and the additional information. Now let us see the receive side first. On the receive side, they have provided the opening balance of cash of the organization, and they have also given the amount of subscription received in cash during the year, the donation that is received, the full interest received during the year, and the proceeds from charity show. They have also given on the payment side the payment of medicines made during the year, the payment on doctor's honorarium, then the payment for salary, the payment for petty expenses, the payment of cash for equipments, and the expenses incurred on charity show, and the closing balance of cash. In the additional information, they have given the columns for the amount columns for 2 years. I mean the opening as well as the closing. So the opening is actually the closing balances of the previous year. That becomes our opening balance in the current year. So this is the opening balance, that is on 1st January 2013, and the closing balance is on 31st December 2013. So here on the adjustments are related with subscriptions. They have given the information on subscription. They have given the information on stock of medicines. They have given information on estimated values of equipments, and the opening and the closing values of building is provided to us. So I'll explain you this adjustments in details. So first of all, let me separate all the items which are of revenue nature, which will come in the income and expenditure account. So on the receive side, we can take all the incomes from here. So first of all, we will separate the items which are of revenue nature, which will come out into our income side. That is, subscription is a revenue item, it will come. Donation, no information, it is a revenue nature. Interest for the full year is received, it's a revenue nature. Then proceeds from charity show is a revenue nature item. So these are the items which are going to come in the income and expenditure account. Then on the payment side, we have medicines, which is of revenue nature, but then since we have some adjustments related to that, we should be careful while taking this item. Then doctor's honorarium is a revenue nature item. Salary is a revenue nature item. Petty expense is a revenue nature item. Equipment is a capital nature, but we can see that number 4 adjustment is there, so there will be some depreciation. So that depreciation will come in the income and expenditure account. Then expenses on charity show is a revenue nature item. So these are the items from the payment side. It will come as an expenditure. Now the additional information which are provided is number 1, subscription outstanding. They have given us the opening value and the closing value of outstanding of subscription. Then they have also given the advance received on subscription, the opening and the closing they have provided. Then the stock of medicines opening as well as closing is provided to us. Then estimated value of equipments opening as well as closing is provided to us, and building opening and closing is provided to us. So the adjustment entries are subscriptions for income, and for expenditures we have medicines adjustment is required. Then depreciation on equipments, we have to consider this also. So these are the items which will require adjustment, and also not to forget building also is there for adjustments. So let me start the sum. Now let me start from the income side first. So for taking the incomes, let me start with the ones which has adjustments. So let me start with subscription. Now subscription, when we take in the income and expenditure account on our income side, we can see that the total cash received as subscription is 47,996. Then we will see the additional information. They have given the opening, that is 240. Opening is the last year's closing. That means last year's outstanding there was 240. If no information is provided, then we assume that this is received in 2013. This is in the current year it is received. So it must be present in this cash of 47,996. So we are going to subtract this because this is the amount of the previous year, which is present in this 47,996. 620 is an outstanding at the end of the year. That means it is an outstanding of the current year. That means the members have not paid this and the organization did not receive this. So if the organization did not receive in the current year, that means it is not included in this 47,996. So it is of the current year. So we have to show the total subscription in the income and expenditure account. We have to add this item. So, okay, next we go for the next adjustment. Subscription received in advance. Subscription which is received in advance means it is received beforehand. Now it is received in advance. It is shown as opening. That means last year it was received as an advance. It was received in 2012, and for which year's advance, the 64 is not been mentioned here. So we assume that it is for the next year. So if it is for the next year, that means this 64 is for received in 2012. It is received for 2013. So it is received in 2012 for 2013. That means the members who have already paid it and the organization already received in 2012 will not be paid again in 2013, but it is of 2013. That means it will not be there. This amount will not be there in the cash of 47,996, but it is of the current year. In order to show the total subscription, we have to add this item because it is not present in this 47,996. Then they have also said that an advance of 100 rupees was received at the end of the year. That means at the end of the year on 31st December 2013, 100 as an advance. The advance which is received in the current year, that means when we are talking about the current year, we are talking for 2013. So if we are talking for 2013, the amount is received as an advance. That means it will be there in this cash of 47,996. But this 100 rupees is we assume that it belongs for, it is received in 2013 in the current year, but it belongs for 2014. So what we need to do it is, because it is present in this 47,996 and we cannot show this 2014's amount, so what we do it is we subtract this amount. We are going to subtract it. So when we show this in our account subscription, then in this case it will be shown in this way. First of all, you write income and expenditure account of Ramakrishna Mission Charitable Hospital for the year ended 31st December 2013. Then you write expenditure on the debit and income on the credit. Then you write by subscription from the receipts and payments. Total cash received is 47,996, out of which 240 belongs for 2012. So we remove, you subtract this. So this is the outstanding of 2012. So you subtract it less. Then we have the outstanding of 2013 needs to be added because it is not present in this 47,996, but it is of the current year. So it is an outstanding which the members have not paid and the organization did not receive, but it is of the current year. So in order to show the total subscription, we need to add this. Then advance received in 2012 for 2013 was 64 rupees. This is an advance which was received in the previous year. It was received in 2012 for 2013. So in 2013, it is not present in this cash of 47,996, but it belongs for the current year. So we are adding this for 64 because it is already received and the members will not pay it again. So it will not be shown in 2013's cash, which is not shown in the receipts and payments account. So it will not be present in this 47,996. So we are adding that. Then we have an advance which is received in the current year in 2013. A cash of rupees 100 was received for 2014. So it is received for 2014. So this amount is actually present in this amount of 47,996. So we need to remove this from this 47,996 because it belongs for 2014, which is received in 2013. It is received. So we have to, it is for 2014. So we are removing it. We are subtracting less advance, which is received in 2013 for 2014. After the adjustment, the total subscription can be shown. The total subscription is 48,340, which is the current year's subscription. Okay. Now from the income side, I think that is the only account which requires adjustment. The rest we can just enter it. Donation is left. Interest for the full year is given, so we don't need to calculate anything on that. Then proceeds from charity show. These are all revenue incomes, so we need to show it on our income side. And when we show it, this is how it will appear. So we have to, by donation, we have by donation, by interest on investment, and by proceeds from charity show. So we will enter that, then our income side will be over. So this is how it will appear on the income side after the entries. Now let us look for the expenditure side. For that, we look at the payment side. Let me start with the adjustments first. So I'm starting first of all with equipments. Equipments is a capital nature item for a not-for-profit organization. But then if there is any depreciation on equipments, we need to take it in our account. We can see that there is a depreciation which can be calculated from this sum, because they have given us the estimated value of equipment's opening is given, as well as the closing is provided. We also have the purchases made during the year, that is 15,000 from our receipts and payments account. So we will calculate the depreciation on equipments, and that will come in our expenditure side of our income and expenditure account. So if you look at this is how we will calculate. They have given us the opening in the additional information. Our opening value of equipments, the stock of equipments, is 21,200. So we write 21,200. Then from the receipts and payments account, what is the purchases made for equipments is shown in the receipts and payments account. So the new purchases is for 15,000. So we add 15,000 and our total comes to 36,000. So our value of equipments, total value of equipment is 36,000. But this value in the closing, it shows us that it is 31,600. So there is a difference of 4,600. So a difference of 4,600 shows that there is a depreciation on these equipments. That means the depreciation of 4,600 will actually come to on the expenditure side as depreciation on equipments. So when we show it in our accounts, it will be shown like this: to depreciation on equipments 4,600. The next item which requires adjustment is, I've taken equipments, I'll take buildings. Now buildings less depreciation, the opening value is 40,000 given to us. Now closing, it shows that it is 38,000 after depreciation. So the amount of depreciation we need to calculate here. There is no purchase of building. We can't see any purchase of building. So we have only the opening as well as the closing. So we can the value which has the value, there is a difference in the values of the opening and the closing, is mainly because of depreciation, because there is no sale of building also, which is shown here. So in that case, when we calculate, we will calculate this way. We will take the opening value provided in the additional information after depreciation is 40,000, the opening. Then we have the closing. The closing shows us 38,000 after depreciation. So the depreciation which was actually calculated or actually made on the opening value of 40,000 is 2,000 rupees. So this 2,000 rupees is the depreciation of the current year on building. So this has to be shown on the expenditure side of our income and expenditure account. So we'll write to depreciation on building 2,000 rupees. Next, there is an item on medicines. The medicine is a revenue nature item. It is of regular nature. So here we have to see the information which is provided to us. If you look at it very carefully, at adjustment number 3, they have given the stock of medicines. At the beginning was 8,810, and they have given a closing of 9,400. They've also given the payments made on medicines. Now in the account, when such information is provided, then we have to take the actual medicines which are used or consumed during the year. That only will come in our income and expenditure account. So in order to calculate that, we have to do it in this way. The opening stock of medicines provided in the additional information is 8,810. Then from the receipts and payments account, the purchases or the payments made is 30,590. So the total value of medicines is 39,400. Now our closing stock of medicines shows us at the end of the year is 9,400. So there is a difference of rupees 30,000, and this difference is actually the medicines which are consumed during the year or used during the year, and this is the amount which will be shown in our income and expenditure account. And we should always remember the materials which are consumed. If in the question they give you the opening stock, the closing stock, as well as we have the purchases, then we have to do it in this way. We take the opening stock, we add the purchases, we find the total value, and then we see how much is the closing stock. We deduct the closing stock, and the difference gives us the materials which are consumed during the year. So when after calculating, we will show this in our debit side as 2 medicines consumed 30,000. Okay, now we have taken all the adjustments. The subscription is over, then stock of medicines we have taken, estimated value of equipments we have taken, then buildings we have taken. Now we are left with the remaining items of payments, which we will take as expenditures. Now we are left with medicines we have taken already, so we'll take doctor's honorarium. It's a regular nature item, so it will come in our income and in our expenditure side. Salary is left, petty expenses is left, then depreciation on equipments we have taken, then expenses on charity show we will take. So when we take these items, it will appear on the debit side. We have to equipments we have entered, depreciation of building we have entered, then medicines we have entered, consumption of medicines, then doctor's honorarium, to doctor's honorarium 9,000, to salaries 27,500, to petty expenses 461, to expenses on charity show 750. When we take the total incomes and the total expenditure, we find that the incomes are more than the expenditure. So the total incomes, if we calculate, it comes to around 80,290. So we write the amount 80,290, and we subtract from this amount the total expenditure. When we subtract the total expenditure, the difference comes to 5,979. So this difference is our surplus. That is our excess of income over expenditure. I hope you have understood how we have solved this sum. So remember how to calculate materials consumed and how to calculate the depreciation part, which is important in this sum when the opening values, the purchases, and the closing is provided to us in the additional information. So if you want to show the working note, you can show it at the end of the sum in this way. I've already done it for you in the beginning, but you can show it at the end of the sum. You can show the calculation of depreciation on building, calculation of depreciation on sports equipment, and calculation of medicines consumed during the year. Thank you.